I suspect that what an investor might do, assuming they have no other assets, looking at the next 10 years, is to begin to save systematically and save probably half of what you save in gold. I say that not because gold will necessarily outperform other assets, but I think that over the next 10 years, the purchasing power of the US dollar will decline by 75%, and that gold will maintain at least its nominal purchasing power, which means that it is a high probability savings instrument. That's a boring answer. I'm tempted to say that a 30-year-old who believes that he or she will be able to increase their disposable income over 10 years, if they're looking at investments simply as investments, should consider buying ExxonMobil.
The size of the global derivatives market, estimated at over $5 trillion, often grabs headlines, but that's not where the true danger lies. The real financial threat stems from unfunded entitlement liabilities and the growing gap between nominal and real interest rates. If retail investors holding high-yield ETFs suddenly panic, thinking they're holding liquid assets, the resulting bond sell-off could trigger a liquidity crisis. Unlike derivatives held by hedge funds, which may quietly collapse, mass redemptions of junk bond ETFs could overwhelm markets. This was eerily similar to what happened in 2008, and few have learned the lesson. In the 1980s, junk bonds were a gold mine for those who understood them. Illiquid instruments became known as owl bonds because when investors tried to sell, brokers would respond to who? Today's investors often misunderstand yield, focusing on returns while ignoring risk. AI could help by parsing complex financial databases if asked the right questions. Used properly, AI can compare balance sheets or screen for companies with sustainable cost structures in seconds. But when asked poorly defined queries, it simply recycles media noise. Like high-yield markets, AI is a powerful tool, but only in skilled hands.
To be honest with you, $35 billion is a lot to you and me, but the notional value of derivatives is more like $5 trillion. I'm not so concerned about that. I'm much more concerned about things like unfunded entitlement liabilities and the imbalance between the nominal and the real interest rates. I mean, if you want me to scare your audience, Kerry, I can really truly do that. I'm less concerned about the impact on Wall Street and the derivatives markets by a silver short. I think it'll be, I think there's probably a couple of quantitative hedge funds that'll go broke. Good riddance.
No one cares about them anyway.
Yeah. But, the derivatives market is truly vast. There are other counterparty scenarios that scare me a lot more. If Ma's and Pa's in the United States that own high-yield ETFs, junk bond ETFs, get a whiff of the beginnings of a credit crisis like they did in 2008 around real estate, and they go to sell those high-yield ETFs, the ETFs are extremely liquid. They trade billions of dollars a day, but they're comprised of assets that are totally illiquid.
Yes.
If they redeem the ETF and the manager has to sell the bonds and can't, now that's a scenario that's truly scary. In shows like yours, where there's live Q&A, I've talked to investors that held high-yield ETFs that didn't understand that the assets were comprised of junk bonds. They just looked at the cover yield, not how the yield was generated. When I was a younger man, I wasn't a young man, but in the 80s, I was pretty active in the high-yield credit market because I understand how to read bond covenants. And I remember that when Drexel Burnham started to blow apart and blew apart the junk bond market, we had a description for these illiquid bonds. We called them owl bonds. And we called them owl bonds because when you called your broker to sell, your broker would say, "To who? To who?" Great market if you understand it. The oil and gas industry junk bonds in the 80s and the 90s made me, relative to my net worth, a large amount of money. I'm forever grateful. But I understood about oil and gas, and I understood about covenants. I remember buying bonds with a cover yield of 12% that were selling at 60. I got a running yield of 20% and a yield to maturity of 35% in a debt instrument. Life doesn't get better than that, but that's not what's on offer today. But you have to know how to ask AI the questions. What AI does is aggregate misinformation often. So if you ask AI to search the EDGAR database or the CEDAR database for companies where general and administrative expense is less than 25% of total expenditures, that's a great use of AI. But if you ask AI to look for lifestyle companies without defining what a lifestyle company is, they'll go to CNBC or Kitco or places, and they'll aggregate a whole bunch of narrative and misinformation. AI is really good for what the Bloomberg GoBots have been good for. It can search databases if you give it very, very, very specific correlations, and it can do it instantaneously. AI can do, in terms of comparative balance sheet analysis, if you know how to ask the question, tasks in 2 minutes that would take me 2 months, and I'm good at it. The important part, though, is that you have to understand how to ask it the right question. I suspect that what an investor might do, assuming they have no other assets, looking at the next 10 years, is to begin to save systematically and save probably half of what you save in gold. I say that not because gold will necessarily outperform other assets, but I think that over the next 10 years, the purchasing power of the US dollar will decline by 75%, and that gold will maintain at least its nominal purchasing power, which means that it is a high probability savings instrument. That's a boring answer. I'm tempted to say that a 30-year-old who believes that he or she will be able to increase their disposable income over 10 years, if they're looking at investments simply as investments, should consider buying ExxonMobil.
Looking ahead, a prudent investor should focus on two things: discipline and value preservation. With the purchasing power of the US dollar expected to decline by as much as 75% in the next decade, gold becomes a rational choice for long-term savings, not to grow wealth rapidly, but to protect it. Younger investors might also consider companies with durable competitive advantages like ExxonMobil. Yet beyond assets, knowledge and community matter more. Skills, wisdom, and reputation can't be taxed or confiscated. Managing the risks in your own mind is often more important than market volatility. Environmental policy should be based on data, not emotion. Mining, often vilified, disturbs less land than many recreational developments, like golf courses. The permitting delays in projects like Resolution Copper in Arizona reflect regulatory dysfunction. Under recent shifts, particularly during Trump's term, agencies like the Bureau of Land Management have become more pragmatic, favoring empirical analysis over political paralysis. However, reform must go deeper. A real environmental safeguard would mandate upfront bonding for mine reclamation, paid by companies via insurance, not taxpayers. Unfortunately, politics still trumps policy. Campaigns remain, as H.L. Mencken said, advanced auctions of stolen property.
Knowledge is an asset. Well, you can lose it, but it can't be stolen. It can't be taxed. The fruits can be taxed. And your reputation, the same. What 30-year-olds need to focus on is the group of people they choose to be their community, because you become the sum of your friends. Your reputation, because if you lose it, it's very difficult to rebuild it. And your knowledge. All the risks that you face, Kerry, probably are manageable if you manage the risk that's to the left of your right ear and to the right of your left ear. Important to understand that the Green New Deal wasn't really about environment. Let's get that out of the way. And I also need to say I'm no particular fan of Trump. But I do note that he has been effective at rescinding executive decrees by prior administrations. And I have noticed myself a real change in the politics of the regulatory agencies, which means frequently in the regulatory agencies, there was a belief at the staff level that resource projects should go ahead. But the politics of the agency were such that at the very least, stasis was what you expected. Now at the BLM, which by the way has really competent technical people working there.
Oh yeah.
They've been hidden well for 20 years, but they're there. Now there is an incentive within the organization to get stuff done. They can use the knowledge that they have in the agency to complete the regulatory process in a responsible manner. It's further to what you say, Kerry. Mining, looked at empirically, is an efficient use of land. You generate an awful lot of economic activity and an awful lot of consumer utility by despoiling a very small piece of earth. The Resolution copper mine in Arizona, when it's built after 27 years of permitting, will have substantially less environmental disturbance than one golf course. Golf courses are green, and people like to play on them. So they're regarded as not being environmentally deleterious. But if you have a monoculture, which is to say grass, in a riparian area, the truth is that they're environmentally extremely dangerous. It's important to look at the concept of environmental degradation from an empirical, technical lens as opposed to an emotional and narrative lens. And I think what Mr. Trump has been able to do at the regulatory agencies is allow them to return to empirical rather than political or narrative analysis. What I would like to see Mr. Trump do, and he won't do it, by the way, but what I'd like to see him do is require upfront bonding, environmental bonding, for resource development in the United States, including exploration. Which means that the company would need to propose a reclamation budget, which the regulator would accept, and that would need to be funded upfront by way of an insurance policy. What happens right now is that the risk is socialized. People promise to reclaim, but you know what a promise is worth, particularly for a bankrupt company. It's worth nothing. The best way to ensure environmental compliance would be for the company planning to do the mine to convince the insurance company to take the risk and pay them the price for the risk that they assumed. That lets the taxpayer off the hook. Then the regulatory process comes to be involved in prohibiting the discharge of deleterious materials from the mine site to the environment. Stop. That's what I'd like to see Mr. Trump do. That's not what he will do. What he will do will be to solicit campaign contributions and political favors from elements in society like the oil and gas industry that he thinks are more aligned with him than the other side, which is to say, Kerry, the old saw that Mencken had about elections being advanced auction of stolen property refers to both Democrats and Republicans in equal measure.